What's good, everybody? Welcome to the Closing Beat. Happy Tuesday. Hope you're having a great day so far. Decent day in the stock markets there. We're going to cover all of that. If you're watching us for the first time, we're financial advisors at Jazz Wealth Managers. We put the show together just to cover the markets, really give you an update, the good, the bad, and the ugly. Take it for what you will. We try not to give specific advice, not really allowed to give specific advice, but we can cover the markets and sort of give you an idea, a non-biased idea of what's happening throughout the day. If you have questions, of course, let us know in the comments if you're watching live, or let me know in the comments below if you enjoy this sort of video. I hope you enjoy this because we're actually building out an entire little town of studios in a new space that we got, and I've been updating you a little bit on Instagram. I'll hopefully continue to do that as we move in and, of course, get all situated. I will try to do more of that. I thought about doing like a little vlog thing, but I don't know. That just seems sort of childish. I don't know. I like making videos, but we'll see. Anyways, check us out at jazzwealth.com. Here's the stock market off to your left. You can see the performance of the markets today. About 0.5% on the Dow, about 1/3% on the S&P 500, and the Nasdaq just barely squeaked out a gain on the day. We'll cover all of that. The markets are basically in wait and see mode. So if you look off to your right there, the chart that you see there is a minute by minute time period, 5 minutes. Every 5 minutes sort of plots what the stock market did throughout the day, the S&P 500. And so you can see we finished just a little bit positive, but sort of floating around. And I think that's going to stay that way going into tomorrow and Thursday as well. You got a lot of market moving news sort of on the block. Tomorrow you got the Fed chairman speaking, then the Thursday you've got the Fed minutes coming out. Everybody's trying to get a hint as to, are the rate hikes going to stay the same? Is it business as usual and everything that's been planned? Or is there a little political influence there to maybe hold off on a rate hike or two? Honestly, it really doesn't matter. It's a quarter point at a time. If you're more than like, I don't know, 27 years old, 25 years old, then you might remember what it was like with much higher interest rates. So if you're younger, of course, you think that these low interest rates are sort of the way the world works, and that's not true. A lot of us can remember paying in the teens for a mortgage, 12, 13, 14, 15%, and getting a good rate at the time to buy a mortgage or to get a mortgage. So really, these little quarter points at a time don't make much of a difference. For some of the commodities, the global news and global performance and everything is upstairs there on a little scroller you see. And down below we have some just little blurbs, news blurbs that you might see there. So that's the first part of the day. Now, going into the end of the week, we have the G20 meeting. Now, to be fair, a lot of this is going to take place over the weekend. So it's going to spill over into next week. Nobody can you tell me, by the way, why the G20, which is actually a couple more than 20 countries, but can you tell me why they are meeting, what they're going to talk about, what they all are gathering in Argentina for? Almost nobody knows. Nobody even cares because everybody's focused on President Trump and the Chinese President Xi. Are they going to work out a trade deal? Are they going to come up with some temporary patch while they continue to fight it out? This is the chance for something to really support the markets or really give it some troubles in the short term. So we'll find out more as we go into next week, and of course, we're going to cover it. Okay, and the Dow started the day pretty weak. I'm just going to actually switch right over to the charts if you'll let me. The Dow started the day fairly weak thanks to United Technologies. They announced that they're going to break their company into 3 companies. United Technologies has a lot of things going on. They're kind of like General Electric. What do they do, right? A lot of people just think of them as a big company, but they own lots of little companies. So they want to split up. They want United Technologies to be one company, which interestingly, if you take out everything that they're trying to take out, it would still be the 71st company in the S&P. So minus the companies they're trying to take out there, they'd still be a pretty powerful player in the S&P 500. Anyways, that was down on the day. There we go. It was lower to start the day, and that was really all of the initial losses in the Dow. One stock accounting for basically all of the declines. At one point, it was 90% of all of the day's losses for the Dow was because of United Technologies. That was its peak, 91%. So I don't know if that's an interesting stat or not. Just I don't even know why I know that. That was that one. Now, here's what happened. You had, if you're a Dow follower, you had Walgreens break out to new highs. You also had Home Depot do pretty well there too. That was a heavier player, up 2%. So that helped bring the Dow back into the positive. Walgreens, news specific, there was news out of the White House that they were going to let pharmacies better negotiate for drugs, really, as they kind of try to make this landscape more competitive. And so Walgreens broke out to new highs. Not really Dow related, but CVS was higher by 2% and Aetna higher by 1%. That deal's been approved, so they can merge. Side note, really. Anyways, that brings the Dow back up a little bit, 2 days in a row. Still under the 200-day moving average. If we move on to the Nasdaq 100, you can see the downtrend. I painted a nice little line for you to keep track if you want. And so that's the Nasdaq, still very much weak and recovering. And then the S&P 500 higher today by about, you can see what it did there. So the S&P 500 still in the downtrend, still under the 200-day moving average, which is the focus, and breaking, well, actually, so for the month so far, it's had 9 days of 1% gains. I'm sorry, for the last 2 months. So I don't know if that matters to you. Anyways, so that's what you have there. S&P higher by, I believe, 8 points on the day. Netflix for the Nasdaq, that was helpful. We'll go into stock-specific news in a second, but Netflix, that was also helpful for the Nasdaq, up 2%, one of the better performers in the Nasdaq. Let's go over to sector news. So basically the flow of the day, as I usually try to talk, we do a top-down analysis. That's the fancy industry term for what we do here every day. Top-down analysis means you look at the broad market, the indices, what happened. You then go down to individual sectors and you try to see some strength or weakness in the sectors, and then you take it a step further and you go into the individual stocks. Top-down analysis. Start at the top of the market, work your way down to the individual stocks. So if we go through the sectors, well, if we just go through different areas of the market, gold was weaker on the day, was one of the weaker areas of the market. The comments yesterday about Trump and the tariffs and everything, that put the pressure on a lot of the gold stocks, your metal stocks, your mining stocks, gold as a commodity, because the dollar was stronger. If you happen to follow the dollar after the president made his comments there, come on. There we go. The dollar broke out to new highs, so that put a lot of pressure on gold. And then if you go into the individual categories of the market there, you can see that the gold mining stocks, that was one of the weaker performers, down 2%. Metals and mining stocks also down 2%, making new 52-week lows. So if you're participating in that area, you took a little hit. If you're looking for a discount, what do you think of that? So metals and mining a little weaker on the day. We go over to semiconductors. Kind of interesting. This wasn't really a focus category for the day or a focus sector. I thought it was interesting because the semiconductors rallied back up strong to start the day. And if you follow candlesticks or charts in general, if you're a technical trader, technical investor, you happen to notice, did you notice right where it stopped? Right at the downtrend line there. So anyone that doesn't believe in charts probably should look at this for the day. If you're one of our customers and you don't know anything about candlesticks or anything that you're seeing on the right-hand side of your screen, send me an email. Let me know. I've done 3 classes that sort of start at the very basics of each one of these candlesticks and sort of leads into how to tell trends, how to tell reversals of trends and things like that. Really just to give you a little extra help. That's kind of what we do here at Jazz, always trying to teach and help a little bit more. Okay, so now stock specific, well, let me see. Is there anything else that I want to cover sector-wise? You had Mexico higher on the day by 1.5%. The bigger sort of areas of the market today, consumer staples, healthcare, here's healthcare up 1%, consumer staples 1%, utilities almost 1%, some of the stronger areas of the market as well. And also in a couple weeks for our customers, if you're one of our customers, we're going to do a class on the individual sectors. If you could only pick one sector to invest in and you wanted the most optimal performance, which one would it be? A sector of the market. If you could only pick 2 or 3, which would be the most efficient way to invest for the greatest possible returns? We've done a ton of research on that, and that's kind of the thing we do in our classes. A lot of times we'll do real geeky stuff, teach you something maybe you didn't know before. So that will be in about 3 weeks. I'll update the events calendar when I get a free moment. Ha 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 ha. Anyways, individual stocks. United Technologies, you're going to see that in the news. They're breaking up into 3 companies. I mentioned that a minute ago. It's going to be United Technologies, Carrier Air Condition, and Otis Elevator. All of those currently under the United Technologies umbrella. They're going to be split apart. In my opinion, that's a big hint that they're willing to sell Carrier Air Condition and they're willing to sell Otis Elevators. There's a real antitrust issue there with the Otis Elevators, so that one would be at the bottom of my list. However, Carrier Air Conditions, To me, they basically just told the world, does anybody want to buy us? If you want to buy us, we're going to break this thing apart to make the transaction even easier. So I'm not sure if that's getting covered or anything on the news, but I'm sure somebody's touched on it. So little hint there. Let's follow up on that and see what happens as that goes through, because not predicting the future or anything. I'm just saying I think that's essentially what they were telling the world, because a company never comes out and says, does anybody want to buy us? Right? They don't do that. It's a sign of weakness. So they always put out these little hints to let them know. Oh, Papa John's was a great one. Papa John's sort of leaked it and sort of hinted at the idea, and hey, we're in a little trouble here. We'd be willing to let somebody buy us. There was a potential bidder, and that seems to have fallen through. At least there was a report of that falling through today. That's why that stock was down 10%, if you happen to catch that on your radar there. Apple actually almost finished positive for the day. Apple down just a fraction of a percent. Because of the tariff news yesterday, Trump saying that he would put tariffs on Chinese phones, which is essentially iPhones, and laptops, which is also Apple laptops or MacBooks. And so that put a little bit of pressure on that one. The stock's been under pressure for quite a while. We covered some stats on that yesterday, that how many times it's been how many times it's been down 20% since iPhones started coming out. This would be the third time, and how far it is from the 50-day moving average. You have to go back to the financial crisis to find something as significant as a pullback as Apple is. So if you like discounts, maybe check out yesterday's video and closing beat and see what you think about that. Okay, Tesla, is it on the charts? Yeah, Tesla on the screen there. Actually only finished down just a little bit. Couple things here. So we'll get to General Motors in a minute, but you had the White House saying, hey, we may remove subsidies on electric vehicles to sort of get back at General Motors. I'll cover that in a minute. The other thing that came out for Tesla was the Chinese Passenger Car Association basically came out and they said, hey, for October, Tesla only sold 211 cars in China, which sounds like a very little amount. And it is, but that's down 70% from last year. So percentage-wise, a big change there. So that was kind of a big deal for Tesla. However, I would say that, look at it, it's still sort of hovering near highs, so people weren't all that concerned. That's 2 solid days of not so good news for Tesla, and the stock price remains kind of steady at highs. That's a hint, not from me, but from Tesla, the stock, to let you know that buyers are still very much staying in control, and sellers have no interest in selling at the moment. So it sort of feels like higher prices there. However, I'm going to refrain from saying that specifically. Spirit Airlines. So Spirit Airlines higher by 15.25% today. They gave guidance for the current quarter. So they didn't report earnings. They just said, hey, things are going really well. Our average revenue per passenger mile is really good. We expect that to continue. We're also doing well by lowering costs. We're doing great lowering costs. And our revenue is a little bit higher than expected. So that sort of helped the initial boost for Spirit Airlines. And then also, if you dig a little deeper, about 9% of the stock is actually short, meaning 9% of all the shares out there were people betting on the stock going down. When you get a significant move higher, that sort of forces them to admit defeat and at least close part of the position. I noticed Alaska Airlines mentioned some similar things about their current quarter, not as effective as Spirit Airlines did, but the stock, that was also higher by 2.33% there as well. If we follow Amazon, so Amazon said that was Cyber Monday. Yesterday was their biggest single sales day ever, period. The stock basically didn't move on the day. And then AT&T, they're continuing to try to work their way out of this. So about 1 million people signed up to watch or paid for the Tiger Woods-Phil Mickelson match. And of those 1 million people, when people went to go tune in, a lot of people got in for free. So if you happen to know where to look, you got in for free. And so they're having to refund a lot of that money. If you paid $20 to watch that match, you can ask for a refund because your buddy got it for free. So sort of a scar on what was kind of a cool event there if you're into golf and you like watching that sort of thing. Okay, lastly, we're going to do General Motors. General Motors was lower by 2.5% today. And I'm going to do something I normally don't do here. Quick lesson of the day. You notice how we don't talk a lot about politics. Politics does not move markets in the long term. Politics just offers some short-term volatility. Wall Street has different motives than Washington. And so if you're an investor, a lot of times you have to put your political beliefs aside for a second, or what side you want to take on a certain argument, and just wonder what Wall Street's looking for. Yesterday, General Motors said, we're closing a plant in Canada. Nobody cared. 2,800 jobs. Nobody really cared. Everybody focused on the fact that they were going to slow or possibly close plants in Ohio and Michigan. Now, read below the surface. I always teach people read below the surface. Wall Street loved that because anytime a company streamlines, cuts back, becomes more efficient, that means potentially profits could be better. If profits are better, that'll attract more investors. If more investors come buy the stock price goes higher, it's worth more. So it's a long-term bet. Yesterday, the bulls were making that bet that things were going to go really well for General Motors. On the politics side of things, if you are someone of my age or older, I'm 36, right? I'm 36, so if you're my age or older, then you remember 2008, don't you? A lot of you had to go through that. Not good times, very tough, right? So in late 2008, 2009, we, as taxpayers, bailed out General Motors. It was sold to us that we can't let General Motors go under. It's an American icon. If they go under, it will hurt the little guy. All those jobs would be lost. Well, the little guy ended up sort of getting the raw end of the deal anyways, because what we did as a company, as a country, is we said, General Motors, tell you what, we're going to let you wipe out all your debt. Go ahead and wipe out all the debt. What they didn't tell you was that shut down a ton of businesses because they didn't get paid. So the little guy ended up kind of getting ripped off there. In addition, the government said, hey, tell you what, for the next 10 years, you don't have to pay taxes, General Motors. Not that they paid a lot of taxes to begin with, but they did. So we said, you don't have to pay taxes for 10 years, provided that you do a few things to make your business more efficient. One of them was get rid of Oldsmobile, GMC, and Buick. Are they still making Buicks? Are they still making GMC? I believe Oldsmobile is gone. Right? They also had all these other criteria that said, General Motors, you have 10 years, you must do all of this. Do you agree? General Motors said, yes, please, we need the money. They took our money. They did not do everything on the list. I can still buy these cars, right? So they didn't make a lot of changes. Now, for the next 10 years, they went along business as usual. Hey, we got bailed out. Great. That's like charging off your credit cards. If someone just goes and pays them off for you, you go right back to spending. You didn't learn any lesson. So I tweeted this earlier. Don't you find it interesting that 10 years is almost up? General Motors is like, uh-oh, fun time's over. We have to start streamlining now because we can't afford to operate this way and pay taxes. Ridiculous. Absolutely ridiculous. And that's why you need to know this business. You got to know, or at least tune in. I'll keep you posted. Now, for me to sort of say things like that makes me seem like a conspiracy theorist. But in this case, it's just fact, right? Nobody's talking about that. Nobody's saying, hey, General Motors, why didn't you follow everything we said that you should do? That's like if your parents pay off, I don't know, student loan debts or something, and they say, but you got to go get a job. You got to get yourself an apartment, go meet yourself a nice girl, a nice man, make a family. I want everything to go well. And instead, that kid goes out and continues to party and spend money ridiculously. Was there a lesson learned there, right? So that one sort of got me fired up today because it's like, oh, wow, nobody's saying, hey, the 10-year time window is up, and we just let you get away with that for the last 10 years. I hope that gets brought up. You know why it won't get brought up, by the way? Trump sort of did this, and if you're a Trump fan, you're like, come on, man, this is your chance. Open that mouth of yours and start speaking. If you're not a Trump fan, you still kind of want him to say a lot about this. And he tried, but he can't say a lot. This will eventually just go away. Nobody's going to care. The reason why? Because General Motors was very crafty and they said, we're going to scale back and put the most amount of sort of streamlining or cutting back in Ohio and Michigan. Mr. President, we know you need Ohio and Michigan to win the White House again, or Republicans in general, to win the White House. Therefore, you're not going to make a big deal out of this because if you do, we're just going to keep going, right? So who's really in control here? It's a really sort of interesting, dramatic thing going on between Wall Street and politics. So that's sort of my lesson of the day. I don't mean to get like fired up about it, but that one sort of frustrates me because that was my money that we put towards General Motors, and I really think of it that way. Anyways, so that's that. That's all I have for you. I'll answer some questions if you have any there, and we'll go from there. Companies, Zach's on fire too, man. I love it. Bruno Lop, 17. The market's index funds go up 10% a year, right? Is that with dividends? I can't say index funds. You got to be careful when you say index funds. When you say the market, and that's sort of our fault in the industry, we'll say the markets average a 10% return. While that's true, that's the S&P 500. There are other indices that do better, and there are others that don't quite compete on the same level. So you got to be careful when you say that. If we want to be really specific and have me not take a lot of negative comments, I have to say the S&P 500 returns an average of 10% as an index. That's the one that everybody's talking about. And yes, that does include dividends when they factor that calculation. Yep. Okay, you only buy U.S. dividends, so you're doing pretty good right now. This would kind of be your time, because while everything's fluctuating around, right, you're still getting paid. So kind of interesting, yeah. You wish Facebook paid, they may be forced into that. I don't know, like Facebook is really sort of still struggling there near lows. But yeah, I hope they pay it for you. Trump 2020. Yeah, that's the thing. No matter what political side you're on, sometimes we all meet together in Wall Street. And that's the funniest thing, because you can be against certain things that Democrats do, certain things that Republicans do, but when it comes to your money, it's somehow everybody just comes together in Wall Street. We put all that garbage aside and we go, we're talking dollars now. We're not talking about someone's opinion, or the Waters, the new chair of the banking committee, who keeps running her mouth about how she's going to regulate the devil out of banks, which is going to hurt, by the way. We all put that aside and we go, so what? Are the banks making money? We want to invest in the banks. And that's a tough one to put aside sometimes, because we all have an opinion about what we think is best for the direction of the country. I mean, I get it. Feels like small cap stocks are diverging and performing better from large cap companies with international exposure. We get to the I would say the opposite. I would say your small cap stocks seem to be underperforming. Notice how, even today's a great example. Watch the ticker up at the top there. You have everything else doing well, but small cap stocks bled a little bit lower. And remember, they started this decline in the first place. Going back to October, before October, I believe. Yeah, late September. Yep. Financial investor average return is 7% over 100 years, not to be expected every year. If you back out the dividends, that's where you come to. You can also make that argument if you say the dividends minus inflation. A lot of people use 7.5%. They'll use 2.5%. I'm sorry, 3% for inflation, and back that out and kind of call it a net return. So it's really unfair, right? I mean, you know, I've seen your comments. You know what you're talking about. But it's really unfair how that's never really defined, because some people, I get comments on, I did a video where the $28 a week is some amount of money, I forget now. That was a really popular video, and I get a lot of negative comments where people go, no, it's actually 5% or 6%. And it's like, yeah, no, that's not what we're talking about. So that should be defined, and actually could be a video in itself. Interestingly enough, if you're still watching, I did a video today. Our Doe Show was what financial advisors don't want to tell you. And it's not to bash on them. I didn't bash on anybody, but there's a lot of things you probably should know about the game, and I broke it down for you. What are your choices as an investor? Where can you go to get the most help, the biggest bang for your buck? And no, it wasn't a constant promotion of jazz, although maybe it should have been. Citron. I am not saying anything about General Motors. I'm not allowed to actually say buy it. I think your smiley face says the point there. I'm saying I'm pretty fired up about these guys getting away with what they're getting away with, considering what we all chipped in to help them with when we all didn't have the money to be chipping in the first place. So that's a tough one. Yeah, you got it. Cool. So that's pretty much it. Procter & Gamble, yeah, that's actually been doing really well. One of the biggest supporters in your staples sector. If you look at consumer, oh, you can't see. Sorry. Can we go back over to the thing? I sometimes mess that up. Yeah, there we go. There's Procter & Gamble on the screen. Of course, one of your stronger names in the consumer staples sector. And if we pull up consumer staples, you can see the overall performance of that. Put the two charts together when you get a moment, and you kind of see very similar pattern there. Look at that's the consumer staples, Procter & Gamble. Huh, wow, a little bit better performance over here, but very, very similar performance, or very similar pattern overall. Nope, that's not happening. Good. Okay. Oh, you like the Doe Show today. I love it. Well, I appreciate you guys watching and coming for our update here. We've got a lot going on. I'll try to keep you posted. We'll be back tomorrow. I've got probably one of the most fun Doe shows we're going to do tomorrow. The idea is based on something that most of you wish you would have done and could not do, but hey, maybe we could teach our kids about this. It has to do with your money, your retirement, and getting married. So we'll see if you guys are up for the challenge tomorrow. I'm going to have a lot of fun with this video tomorrow. So if you get a chance, check out the Doe Show tomorrow at 1 p.m. If we've helped you in some way, it'd be awesome. You hit the subscribe button. That's going to help our cause for later next year. We're going to go giving some speeches, talking to the different advisors and the sort of financial advisor conferences in the space. We've actually been invited to one, so things are looking up for that goal of mine. I really appreciate it, and enjoy. We'll talk to you tomorrow.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.